Hey everyone, and thanks for jumping back into the cryptoverse. This is a premium only video. This is the first video I've published that isn't part of the weekly newsletter that comes at the end of the weekend on Sunday night my time. But I want to put this video out just because I kind of want to talk about the market and where things are right now and how things can quickly get out of control so that you guys are ready, for what could happen. It doesn't necessarily have to happen, but on the chance that it does happen, you need to be ready for it. And it's also what's already happening, not even saying, okay, what's going to happen, but what's already happening around us. So I hope you guys enjoyed the video. If you follow the channel, you know we cover ADA a lot. We talk about Bitcoin, Ethereum, Chainlink, and ADA. And ADA and Link have been, they've been moving up significantly in the last few weeks. I want to start though with looking at ADA. So ADA here, if you look at this move, it's up like 250% or so against Bitcoin, I believe, in not a very long period of time. Since the end of March, at the peak, it was up 238%, and currently it's up around 200%. But this move here is what is quite significant. Now, I want to remind you of our, the textbook market cycle, or not even the market cycle, but just what a bubble looks like. And I can assure you that, while I've been making these videos, I've been making videos on ADA even when it was at 2 cents. And because I thought, okay, it's not fair to measure the valuation of ADA with respect to its prior all-time high. Because if you are, it's just a completely irrational time. There's no reason to make a rational investment decision based on something that irrationally happened 3 years ago. Okay, this doesn't make sense. But by getting into an asset when it's kind of like at the lows, okay, when it's, that capitulation candle during the bear market, this is where a lot of money can be made. I mean, this is not financial advice. We're just looking at markets, but I want to walk you through kind of the feelings in this kind of a cycle. So you first get that disbelief phase, right? And this is kind of where, ADA is starting to move up to 3, 4, 5 cents, 6 cents. And then people just start saying, you know what, we're probably just going to dump right back down to 3 or 4 cents. I saw this on a lot of my YouTube videos. If you guys go back and look at some of the comments in some of the YouTube videos from a couple months ago, you'll see the sheer disbelief. Even a few weeks ago, it was there. And then these comments start to go away after a while. They kind of take a step back and like, wait a second, maybe this is the real thing. Maybe it's not just another fool's rally, and we're not in this, continuing to be pushed down phase. And then they start to get this hope about them and this optimism. And a lot of the people that are in the disbelief phase who say that it can't go up, a lot of times they own the asset themselves, and they're just so, apathetic about the whole thing, because anytime they see it go up, they just kind of get disheartened because then it just comes straight back down. A lot of times these are the people, I think, that are saying it. Of course, it's also the people that don't want to see it go up because they don't have a vested interest in it. But then you get to the point where people start to be like, okay, maybe this is the real thing. They start to feel optimistic, and I think it's easy to see this if you look at most of my videos on ADA. They only have gotten maybe a few thousand views, whereas the one I published on ADA like 2 or 3 days ago, it got like 15,000 views. So you can see the market's changing. A lot of money's coming in, and it's because people are starting to have this real optimism about them, okay? And then you get into the phase where people believe, okay? And this is where, you see an asset like ADA, it's been going up like 10 to 20% a day for a while, and then people start to think, well, wait a second, why do I have my money invested in Bitcoin or Ethereum or wherever it may be when this other asset is going up 20% per day? This is the dangerous thinking that burns a lot of people. It burned a lot of people in 2017. There's all sorts of speculative bubbles that will occur even during this long speculative bubble or bull market that would hopefully form with Bitcoin over the next several years. We're going to see micro bubbles form in different coins. We saw it in the last cycle. For instance, when Bitcoin got, it held the 20-week moving average, Ethereum shot up. When Bitcoin got back to its previous all-time high, a lot of coins shot up, and then they came back down until Bitcoin made its next move. So the key thing is taking advantage of these moves. And the thing is that no one knows where the top is, okay? So there's that thrill phase where people start buying on margin. You start leverage trading because you think, well, I have everything invested and I'm still making money. Why not pull out leverage? And this is very dangerous because When something goes up this quickly and you get that euphoric feeling of I'm a genius, I'm going to be wealthy beyond my wildest imagination. If ADA goes up another, say, 10x, then you start thinking like, okay, well, where would that put me? And this isn't, I'm talking about ADA right now because it's the one that has been moving the most recently. But this applies to any coin. I've already seen many coins this year go up 30 to 50x. If you follow like Uniswap and some of that, you'll know that there are a lot of coins that do that. And basically every single one that did something like that ended up retracing. Now, that doesn't mean they have to retrace all the way back down here. The retracement back down to this level is usually accompanied by a Bitcoin bear market, where Bitcoin is just crashing, and if Bitcoin's crashing and all these altcoins were already in a speculative bubble, this is where they get hammered hard and fall like 98%, which many of you guys realized. So if Bitcoin stays bullish, even a lot of these other coins, like they're going to come through these phases with respect to Bitcoin where they will likely retrace, okay? Because again, we know that Bitcoin's going to go on a run again eventually, and there's going to be a retracement. And when you're looking at an asset on this ADA, this is the ADA Bitcoin chart. When you see this, you know that it can't go up like this forever. Like, it's not going to increase 20% per day for the next 2 years. It's just not. So the key thing is, how do you know when you should take profits? Like, how do you figure this out? And I've gotten a lot of new subscribers recently, so I just want to walk you guys through. So we have this Google Sheets document, and I think you really should spend a lot of time on it. You can see that we have our main dashboard here. Okay, this shows we have several different assets, and if they have a risk level associated with them, these are the ones that I'm using. You can see that Bitcoin is now above 0.4, Ethereum is above 0.4, ADA, okay, is at 0.45. And note that ADA was around 0.35 not that long ago. If you look at the risk level of ADA, you can see that at 0.35 it would have been at 7 cents, and literally, this was like 2 weeks ago that the risk on ADA, 2 or 3 weeks ago, where the risk on ADA was literally 0.35. And I mean, maybe the actual number doesn't mean a whole lot to you, but when you see a risk go up by 0.1 in a matter of a couple weeks, you know something's up. Now the key thing is, right, how do you leverage a time like this to your advantage? And speaking as someone who's lived through many of these bubbles in crypto, I will again assure you that I cannot tell you where the top is. I can tell you, how I'm going about it, and the way that I do it, and the way that I'm happy, with whatever happens, is what I do is I just take profits, I dynamically DCA at each sell level. Now, with Bitcoin, I don't start selling until Bitcoin gets to a risk level of 0.5 or higher. Mainly because Bitcoin is the market mover. It's the one I'm, the most confident in long term. It's not the one that I think has the best returns, but it's the one that has the best risk-adjusted returns. So the one, well, not necessarily, Link has really good risk-adjusted returns too, but in terms of having a long history and being more confident, Bitcoin, I believe, has among the best risk-adjusted returns, which is important to distinguish between your general returns. Okay, risk-adjusted returns are important. So Bitcoin, I don't start selling Bitcoin until we get to a risk of 0.5 or higher, which means I'm not looking to sell Bitcoin until it gets to 13,000. And at this point, I would just put in, I would put in a stop loss to make sure that I sell in this risk level. But if it keeps going up, then I'll just raise my stop loss up. Now, with coins like ADA and Link, with Link, I made a video. If you look at the video earlier, about 3 days ago, the risk on Link was around 0.52, 0.53, I believe, and I said that with Link, I'm more confident on Link. It has a great history. It's been performing well even in Bitcoin's bear market. But I did say that personally, I would start taking my profits on Link once the risk hit 0.55. And guys, I stick to what I say. If I'm basing it on the math, I don't let the greed overcome me. And so this means that I did have a sell at Link for 1/15 of my position when it got to the 0.55 risk level. With ADA, I already took my profits at that point at the 0.4 level. So with ADA, I said, okay, when the risk gets to 0.4, in that risk regime, this is where I'm going to start taking profits with ADA. But remember, when I say take profits, I mean what I'm doing is I'm just doing it dynamically. I'm only selling 1/15 of my position, okay? 1/15 for ADA and 1/15 for Link. I mean, this is not a lot, right? I mean, 1/15 is a fairly small amount. Why do I only do 1/15? Well, remember, if you're looking at the risk regimes, if the idea is if we go into a speculative bubble and say something like ADA starts moving quickly, you have to think of these in percent differences. I mean, going from say 10 cents to 20 cents, okay, so going from a risk of 0.11 to 0.19, this is a 2x. Well, then the next 2x move would be 20 to 40, and then the next one would be 40 to 80. The next one would be 80 to 160, and then up to and 160 is obviously not even on this chart right now. But you can see that in terms of percent moves, it does, going from these higher levels, going from 0.2 to 0.3 isn't as hard as going from say 0.1 to 0.2 or 0.02 to 0.03 is what I mean. Because in terms of a percent move, it's a lot less. And this is why I do a little bit early on, because if and when you see an asset go up parabolically over the course of a couple weeks, you want to have some left over so that you can leverage that position and take profits at these higher risk levels. So I can't tell you how high 8 is going to go. I mean, for all we know, 13.5 cents is its peak. But on the chance that it does go higher, if it goes to 20 cents, if it goes to 30 cents or 40 cents, it's nice to have some left over in the event that happens. And the way that I do it is when the risk is between 0.4 and 0.5, I sell X, which in this case is 1/15 of my position. When it's between 0.5 and 0.6, I sell 2X, so 2/15. Then each risk level, I sell 3/15 and 4/15 and 5/15 until all of it is just gone. This is how I do it. So selling the last of my position I would be selling about a third, the remaining 1/3 of my position, if ADA got between 70 cents and 90 cents. Now, you may ask yourself, well, what if it went to $2? Okay, and this is where your own risk tolerance has to come in. I mean, if you think that it can do something like that, and you're okay taking that risk on, then you could always keep some left over. I mean, another strategy is you just sell 20% of your position each risk level. So like you sell 20% of that position at each risk level, not 20% of your total former position. So like, let's say you have like a million ADA or something, then you if you want to sell 20%, you could sell say 200,000. But then the next time you sell 20%, you're selling 20% of 800,000, so that you're always going to have some ADA left over to continue to hold, and then you can continue to sell if the risk goes up. Now again, no one knows where the top is. This seems crazy, and in the same manner that we could retrace from here and come back down, we could also, I've seen it happen before. I mean, we can also just continue shooting up. I mean, at this rate, if ADA were to see another week of this type of action, it's not that out of the realm of possibility that you could see a move, up into this level over here. I'm not saying it'll happen, but if it does happen, you really need to be ready for it. And this is why I'm saying, DCA your buys and DCA your sells. It's your friend, because if you don't do it, you might be more profitable if you don't do it, because maybe you get lucky, and if you're able to time the top perfectly, then congratulations to you. You're extremely lucky, and I think that's a great. If you're like me and you realize you're human, you're probably not going to time the top. What's probably going to happen if you base it off your emotions is you think it's going to go up forever. Then you're going to watch it come down, but then you're not going to want to sell, because you're kind of mad at yourself that you didn't sell at the peak, and so you don't sell. And then you just wait for it to get back to that point, and then you say you're going to sell, but then it never gets back to that point, and then you're kind of back to where you started. This is what you want to avoid, because a lot of these coins are going to go through these cycles. They're going to go through parabolic move after parabolic move, and it's if you take advantage of that move that you really can be set up for success during a long bull market. Because imagine you're DCAing your way out of ADA right now over the next couple weeks, assuming it continues to go up. And by the way, if it goes back down in the short term, then congratulations, you did take some profits, and now you can use those profits to buy back in the same amount of ADA that you had, and then you can either get more ADA or invest that elsewhere. Okay. Now, what am I doing personally? Like I said the other day, I'm DCAing my ADA into Ethereum right now. I said it yesterday in one of the chats, and the reason is because ADA is going parabolic. Ethereum has been kind of sitting there, and so far it seems to be doing quite well. I mean, in terms of what it's doing today, but I am waiting for an Ethereum move. Again, I don't know if it's going to happen, but I'm fairly bullish on Ethereum. The only reason I would be cautious is if Bitcoin drops back down. If you see Bitcoin dropping back down to the 20-week moving average, this is when I would be cautious about my altcoin positions, and this is when I would get out of all these or a lot of these altcoin positions and just consolidate myself into Bitcoin and stablecoins and be happy that I took advantage of some of these parabolic moves in the short term. Because if you think about it, if you DCA your sell let's just imagine you DCL ADA. And by the way, if you're not invested in ADA, I mean this strategy works for any coin. I mean if you're holding any coin that's doing something like this, I mean VeChain's another one that is going parabolic. So again, if you DCA out and then let's say it comes up to this point and then it crashes back down, then it's great because you took advantage of that and then you diversified that risk. You took that risk, you minimized that risk, you got rid of it, and then you put it in lower risk assets that have not gone parabolic. Okay, this is the idea, and you just continue to repeat this cycle. Now, when a full-out bull market is on and coins are going parabolic like crazy, you can imagine how lucrative this can be because every time a coin goes parabolic, you're DCAing your way out, and you're reinvesting that into assets that have not gone parabolic yet, and the risk level on those are still low. So this is the strategy, and this is why I think if you can learn the strategy now, when we're kind of in maybe a micro bubble, I don't think that I certainly don't think Bitcoin's going to 100K this year or anything. But if you can learn the strategy now, then over the next several years, you just rinse and repeat that strategy. You don't worry about what your emotions tell you. You just look at the math. Oh, hey, the risk level is 0.7, or this random coin that I hold is up 2,000% in a month. Okay, let me be a little bit level-headed here. And if the idea is, well, this isn't life-changing money, maybe I'm up, maybe you're up 10x on a coin, maybe you had, say, 10,000 invested, and then that coin went up 10x, now you have 100,000 in that coin, and you're thinking, okay, well, 100K, it's great, but really I want $1 million, or, really I want like 5 million, and so I'm just going to wait until that happens. Well, you could get lucky on a single coin. A single coin could go up that high, and you could get really lucky. Ethereum would be a classic example of that last market cycle. Maybe ADA will do something similar. I don't know. But what you could do also is, even though 100K might not be life-changing, if maybe your goal is to buy like a $2 million house or something, but if you're able to take that, say 100K, and then diversify it into other coins while still holding some of that coin that's moving. But if you're able to diversify some of it, you're reducing your idiosyncratic risk on that coin while then diversifying it into other coins that maybe have not gone parabolic yet and that maybe are more likely to see a parabolic move. Now, this doesn't mean you go micro-cap hunting and take your profits and then throw them into some random coin that you found on CoinMarketCap with a cool name. This does not mean that. It means that you've already picked the certain types of coins that you want to hold. You notice that one risk is twice as high as a risk on a different coin, and this is kind of a way of creating your own like an index fund, but you're reweighting your portfolio based on these parabolic moves. Okay, because what's one of the worst feelings? Okay, one of the worst feelings is when you watch something like this happen with ADA, and then you just watch it come right back down. Okay. And to put this in perspective, I mean, look at this move here. I mean, just look at this move and compare it to where we currently are. This is why I say there is no way anyone can tell you where the top is. The top, we could be at the top now, or we could be at the top in 3 weeks at a valuation 5 times higher than where we currently are. We don't know. But this is why DCAing is incredibly important. Personally, for me, I have started DCAing my ADA and Link sells because ADA is at that 0.45 or that 0.4 to 0.5 risk band, and Link reached 0.55, which is where I said I would make my first Link sell. Again, not financial advice. This is just what I'm doing. If you want to emulate what I'm doing, you can come up with the same strategy. Or if you're curious about different strategies, I would encourage you to go to the Dynamic DCA Strategy tab. There is a premium video on this, but the idea is that you have different strategies, different weighting. So this one would be selling the same percentage at each risk level. This one would be linearly doing it. This is the way I do it. And then this one is exponential weighting. So what you do is you just come over here and let's say you have, let's say 10 Bitcoin, you put that in. You say, I think the future projected peak is 120,000. From there, it calculates out based on some back of the envelope math that I did, which you could argue, I mean, it's a little bit hand wavy, but it's more or less just a learning exercise. You can say, okay, well, the middle of the risk span for 0.9 to 1 would likely be 87,000 to 96,000 in a few years if the peak is at 120,000. Therefore, it shows you your cumulative amount you would have made had you sold, say, the same percentage at each risk level. So here, if you sold the same percentage starting at 0.4, you'd be at 18.6, 0.5, 50.1, and this means that it's adding up this one and this one to give you 50, okay? So if you followed a conservative approach, then by the time you reach the 0.9 to 1, you would have made $427,000 if the total number of Bitcoin you held was 10, and if the future projected peak was $120,000, okay? And this goes off, this is, and then it shows you different strategies, whether you're conservative, moderate, aggressive. It looks like someone just changed it actually right now. Super aggressive, the hodler, which I don't recommend, or YOLO, which I don't recommend. But this is generally the general idea. Now let's put this back in. Let's say it's 10 Bitcoin, and let's say you do it my method. So you can see the advantage of doing it this way, because even if you go with the conservative approach, at peak your profits would be 545K, or the total amount you would have exited from, versus 427K at this conservative level, where you're selling the same percentage. So this is the power, I would say, of dynamic DCA. Also, if you follow exponential, you can see it would be even higher. The reason I don't do exponential is because it weights your risk so much. You're holding so much of these profits so late that on the chance that we don't get to that risk level, like, it really can destroy your portfolio. So this is why I don't do it exponentially. I do it linearly. The difference between this one is this one is if you're selling at the beginning of each risk band, and this one over here is if you're selling at the middle of each risk band. Okay, this is the general idea. So check this out if you want. You can just go up here. You can put in the total number of Bitcoin you have, the future projected peak that you think it is. So you could, if you think Bitcoin's going to 50K, you put in 50K. If you think it's going to 500,000, you put in 500,000. And then you can pick a strategy based on these risk metrics that work for you. And I'm just telling you what I do. So for a lot of altcoins, I start my DCA sales at 0.4. For Bitcoin, Ethereum, and Chainlink, I started at 0.5, and I do it based on linear scaling. And I try to just get the most bang for my buck, so I just put a stop loss. You can think of it as a trailing stop loss, but I do it manually instead. So I just want to update you guys on this. If you're new, we got a lot of new people recently. If you are new, we also have another tab called Dynamic DCA. This is it's basically an inferior version of this, but you can also just look to see the different risk levels, like how much you could be selling at each risk level had you had a certain number of Bitcoin based on different strategies. If you want to check out a lot of the premium content, you can go to this tab. I'm probably going to have to change where this is located. I'm probably just going to make the premium content, I'm not going to have it be a tab, but I'm going to have it be like a Word document that I update continuously. But right now I just have it in Excel. I would encourage you to go look at these videos. If you want to look at risk management, I think that would be very helpful. But go through these videos. The dynamic DCA strategy talks about what I just spoke about. Go through these videos and really try to understand what I'm talking about, because I think it's worth your time. And then for each of these, we also have the different risk levels of the different coins, so you can see at what price would it reach a certain risk level. If you're confused as to why 40,000 would be a risk of 1, remember the risk is dynamic. So while it's 40,000 corresponds to a risk level of 1, that's if it went there today. If it takes Bitcoin 3 years to get to its new peak, the risk level at 1 could be over 100K. So this is where it is in the short term. It gives you instantaneous information so that you can use it to your advantage. We have the Ethereum risk tab. We have the ADA risk tab. We have Litecoin risk tab. We have a feature request, which I haven't been as good about getting to recently, but some of these I have done. I just haven't filled it in. I think someone had asked for Tim asked for the risk metric for link. So we'll go ahead and say that we did that one, and I'll just put done in that box. And so this is where you can put in, say, a feature request, and I'll try to add it on there. We also have our fair market value. You can follow along here. I try to update this about every week or so. You can just generally see if the market is undervalued or overvalued. And I was talking about how we're undervalued. Obviously, the market cap is increasing, so we're probably getting closer to the fair value line. We also have a Tesla tab, which I don't talk about as much, and it has been a while since I updated it. But this is what it looks like. And so I'll need to update it. With Tesla, we are getting back up to this upper green line again. So, if you do hold Tesla, just remember that these bubbles don't necessarily last forever. We can't predict how high they go, but just keep that in mind. And then we also have the S&P 500 risk level as well. So let me know what you guys think. I hope this video has been helpful. The markets are certainly moving right now. ADA, you can see, is doing fairly well. And we'll see where things head. Ethereum is up, since yesterday. I mean, maybe it's starting to move up. One of the things I wanted to remind you guys is of this trend here. We have that 20-month moving average, which has been that resistance area for Ethereum for quite a while now, several months, these 5 months, and now we're starting to blast above it. So, like I said, if you continue to see Bitcoin stay where it's at, it doesn't even have to go up. If you continue to stay where it's at, just like I've been saying for weeks, there's a good chance that coins like ADA and Link are going to continue to shine, and that Ethereum could be gearing up for a move of its own, especially if we see it, break through this region and people start to realize, okay, maybe we are getting into a short-term speculative bubble, and the show is getting started. So just keep all this in mind. And then here's the link chart as well. You can see that it's starting to really take a move up too. So the key points are, remember that DCA is your friend, both buying and selling, okay? So buying and selling is important when it comes to DCA, because we don't know where the bottom is, we don't know where the top is, but by doing it, we can assure that we're taking profits when the market moves up, and we're reducing our overall risk when the market is low by continuing to purchase those coins when the risk level is low. So become accustomed to the bubble chart. Many of you have probably seen it and know it, but you still don't actually treat your crypto as if you know what it is. You just continue to hold on forever and ever, and you reach this euphoric phase, and it comes back down. Again, with ADA, I'm not saying that ADA is going to come back down to its short-term bubble levels. If Bitcoin remains bullish, then ADA could have the run of its life. I mean, it could go up 100x from the bottom this market cycle. There's a lot of coins that I think that might have that in them if Bitcoin does go to 100K, and I think ADA is one of them. But in terms of getting there, the path to getting there is going to be a long one. It's not going to be 100x in a week, okay? So take this all into consideration. I hope you guys enjoyed the video. Let me know, did you guys like kind of the video update in the middle of the week? Let me know if this has been helpful for you. I would encourage you to just go check out all the resources I have out there for you. Put in a feature request if there's something you want to see, and I'll see you guys next time. Bye.